Welcome. Let's take a look now at a trade for the week. For the week starting Monday, the 4th of February, Chris Beauchamp is with us with analysis, first of all, of last week's trade. And I think this is, if anything else, a lesson in how to trade the markets when things don't go to plan.
Yes, we were looking at the Nasdaq last week, and overall the week was very strong, but on the beginning of the week it was quite volatile, and certainly we looked back, we had a narrow stop on this one before the open. US markets dropped heavily into the beginning of the day. Then arguably they did sort of bounced around 6650, 6600 for a while, and then rallied into the close of the week. So our stop was at 6700. That was wiped out even before the day began, really, for US markets, certainly the cash session. But you did see a steady recovery. So arguably it's on the case of people probably put their stop losses too close, and I certainly fell for that this time around. I think it's often a good case to sort of look maybe at the longer term chart just to get a sense of where we are before putting a stop. So it wasn't a bad trade in the end, but undoubtedly it was certainly a difficult one to try and pick your entry point this week. Yeah.
Okay, so what's your trade for this week?
Well, gold has been on a tear of late, really, since August when it bottomed out at 1160. And the problem with this kind of rally is it does give you sometimes few opportunities to hop on board. It's been in a range-bound period you saw throughout most of January, bouncing from 1275 up to about 1300. Broke out again spectacularly last week, and it's got a first meaningful pullback in a number of days, and this is the 4-hourly chart. So if you use something like stochastic, you can see that the momentum has heavily shifted to the downside in the short term, but those moving averages, while they're not a guide to what happens next, they sort of show you that the uptrend is still very much in effect, and buying the dips is the way to go here. So we're going long gold.
We've just come up to some interesting support at 1309. Where would you put your stop on this chart?
Well, I think we'll let this one run a bit broader in terms of its stop loss. So you could go with 1310, 1309 itself, because as you rightly point out, that's good support. But if you want to give it a bit more room to breathe, maybe a bit of volatility before the open, maybe down to 1300 itself, because that was previously strong resistance right at the beginning of January, and then again you can see almost at the end of the month before it broke higher. So that, on the idea that resistance has now become support, you'd be looking to put your stop around there and then allow for a turn higher with a target maybe towards 1325 or even higher over the next week.
Okay, all right, Chris, thanks indeed for that, setting up this week's trade, which is long gold.
It was a torrid 2018 for emerging markets, amid a strengthening US dollar and global trade tensions. So, with valuations now looking more attractive, how does that weigh up against the fears of a slowdown in China? I'll be posing questions like these to our panel of EM experts. The guests include Gavin Sirkin, founder and managing editor of Frontier Funds Media and Intelligence, and Paul McNamara, Investment Director at GAM Investments. Our aim? To uncover the best investment opportunities from equities to forex within the EM complex. So don't miss our show and find out what are the emerging markets to watch in 2019. We'll be streaming live across IG.com, YouTube, Twitter and Facebook. So join the debate and ask your questions using #IGEMChat.